share their data with us. We have a lot of teams working on mapping the data lying within RE with what is expected on Udyam. So that process is now pretty smooth. We've worked more with the banking sector, and now we are sort of starting the journey with the MFI sector. But having said that, a lot of MFIs have successfully sort of pushed their data through. So I can only say that it's extremely simple, and let's get it moving faster. Its largest benefit is really the PSL benefit, and I think that's probably the single biggest reason why the MFIs and the banks are coming forward. But what we really need to start thinking now is, based on Udyam, what is it that we are going to provide to such entities? So they're obviously not going to be happy with just a number. So what we have thought about is the fact that the largest requirement of that segment, and as you all know, the segment, and as you've said, is very varied. So even if we were to take the sort of top layer of the micro and nano is a better fitting word. So we are looking at maybe 20,000 rupees of a continuous credit. Now, we don't want to use the wrong terminology, so it's really providing credit such that it can get sort of rolled over very easily. So it's about creating an appropriate credit product which will pass muster with typically the regulator, so that we do not call it working capital, we do not call it revolving credit, because those terms are well understood and have a particular way of delivering, which we obviously cannot follow when we deliver that kind of money to the desired segment. So we really have to call it something else. Not a problem, but I'm saying the idea is to give money at reasonable, affordable rates. Now, I don't want to get into controversies of what are the appropriate rates, because that's a commercial decision, and I'm still completely aware that till the last money lender is not sort of converted into a regulated entity, we still are doing an excellent job of providing credit. So having said that, it's really about driving home the advantage for such entities that wish to grow faster. And that is a decision which each commercial lender will have to take. But the ability to give a continuous supply of credit in some manner equivalent to working capital is, I think, the biggest demand, and therefore the sort of reason why we want to drive this. On our own, we cannot obviously do it, and therefore we are reaching out to all partners, be it MFI, be it BC, be it anybody who has an understanding on the ground of that particular community. And therefore, it's, again, a fully digitized system where a handheld device collects the data and that is transmitted. We need two things. One is a CIBIL score, which luckily thanks to the MFI segment, that CIBIL score or the Equifax score or whatever it is, the bureau score, that has now come to exist. We also are looking at account aggregator based bank statement, which is again flowing very smoothly when we're talking about saving bank accounts. I would be very happy to hear from others here the experiment on the SHG. I think that's something which we are very happy to commit to, saying that how do we capture the rich transaction data which is there for maybe 5 years, 10 years, whatever the period might be, but that needs to flow to a credit bureau and therefore add to the richness of the data, and therefore the credit history gets made for many more than just the 4 crore, which is a number that has been given to us from the MFI industry. I don't know whether that's right or wrong. The last point I'll make is the non-credit part. So there's a lot that we can just push, having got their contact number. Now, we have to presume that that number will be reasonably stable. It's not going to change every 6 months. And therefore, we have the ability to, sort of mine that data and push through in whatever manner. So I'm saying AI is just a tool. It's got nothing else in it, but it's a tool to be able to discern patterns within large masses of data, and therefore we'll be able to push through content to a lot of these people, which I think will be extremely useful for them. And the next thing which I would like to really do is push through, the other products, like basically it's insurance. So I think I'll just stop there.
No, I think it does touch upon a lot of the themes that we were planning to go into. Yeah, I was thinking since we spoke about civil sport last, should we start with into credit? But let's start with Udyam. I think that was the flow we had got. And it also, should form the bedrock of the future of the industry. So let's start with Udyam. Uh, Thank you. I'm not audible. Okay. uh, huh? Okay. Acha. So yes, I would say I think as we've been watching the Udyam journey, the UAP portal is of course has been a great benefit. The PSL norm has been a great push for the NBFCs to record it. I think a few things was, how do nano enterprises which are not already in the credit segment who are availing PSL, how do we get there? I was also speaking to, the team behind Aadhaar and India Stack on just the implementation, the number of fields, how do you get validity of the data, is it gibberish? And I think the confidence I got was that first 3 years, even if you're getting bad quality data, as long as we're getting data and we're getting enrollment, and then there's a way forward to try and get more and more authenticated data around it. So there is this whole leg of implementation and more Udyam enrollment especially who are not in the financially included space. But I think the second was, what do NBFCs do or look for with the Udyam registration? I think from a customer standpoint, we've seen instances where they display an Udyam registration on the shop. I mean, it's a matter of pride, it's a matter of formalization. Uh, but there are several benefits which today also go with Udyam registration, which people are not aware of. I think some concessions and utility bills and all, I don't even know how they avail of it. But there is this whole awareness issue. And then most important, there's a data linkage issue. On the same customer and the same nano entrepreneur, we of course have the India Stack data, we have UPI data, we have shop and registration data, which are state subjects. Soon we may have e-shram data on the employees that they, or contractors that they hire. But we are not seeing a linkage of this. And I think today, again, the data platforms allow us to create linkage. So I'll actually invite Utkarsh. He's here from Samagra, which is a governance consulting firm. They do a lot of work around data and tech, and again, have people who've worked on India Stack in the team. But maybe, Utkarsh, you want to take this forward and also give some examples where we could come together to create a data linkage.
Yeah, thanks, Geeta. I think what Mr. Raman said about interlinking the data sets is what I was supposed to speak about, and this theme is based on that. I'll start with one example from government of Odisha, where the government is trying to enable credit through providing these data sets to the banks and other non-banking financial corporation, NBFCs. So what they have done is they have created a database, just like Udyam, they have created a database of 7.7 million farmers, all Aadhaar authenticated, and all of their bank accounts are also verified. Uh, the credit for the farmers, again, they did a study and they realized the multiple factors that impact credit for farmers, including what crops they are growing, how much land holdings do they have, what is the weather of those geographies, are the crops viable for those geographies or not. They brought together all of this data in one single place by interlinking all the government data sets that they had. So for example, soil health card tells you about how the soil of that particular land parcel is. Land records tells whether the farmer has the ownership of that land parcel or not. Similarly, procurement database tells whether the farmer has sold their crops back to the government or not, and what are the prices that they have received. These operations have been running with the government for last 10 years or so, right? So that government in silos, in siloed database, almost had transaction histories of farmers in their databases. And what has been done is to bring all of this together in one single database or interlinked, and then this is being exposed. There is another layer that has been created on top of it, which is called Shuffle portal, where almost 40 banks offering some 400 loan products have been onboarded. When a farmer applies for the loan, the farmer goes to the portal. Their applications are filled directly through the data that is there on the Krishak Odisha database. Additional reports, etc., they submit and they give a consent to the portal whether they would want to expose their data on Krishak Odisha database to the banks for better decision making. What we have seen is whenever the consent is given and the data is exposed to the banks, in fact, the time in which the bank's decision comes, positive or negative, it has reduced from 120 days to 55 days in last 1 year. So that's one example of how data can help in faster decision making, just because the amount of data that is being created or generated in the country right now. So on that note, yeah, yeah. So on the other thing is, of course, this data once created, the other thing is accuracy of this data, because there are certain fields which are fast moving fields, there are certain fields which move slowly. What we have done is, because all these data sets, there are almost 13 plus data sets that have been connected, uh, the comparison happens between what is the farmer provided as a data in database A versus database B. There are algorithms that have been created which determine the confidence level of each of the data points in the farmer's database. So let's say for land records, for a particular farmer, whether the land records that has been seeded in Krishak Odisha database, whether they are correct or not, and to what degree can we say that they are correct. That is being determined through a machine learning algorithm which runs across these databases. So there's something called a truth finder algorithm. I'll not go into the details of it, but right now I can, because we have been implementing this with government of Odisha, I can confidently say that our algorithm, 89% of the data in the database for the farmers is correct. And this is well ground truthed through samples, etc. In fact, on the sample, when we went for the sample on the ground, the 94% data was correct, while algorithm is a little conservative in nature. So those are the two key aspects, and I would like to open it up for everyone on their thoughts on these two concepts, on what kind of data sets will help us in improving the decision making around credit for nano entrepreneurs. And the other topic could be is around how can we determine the confidence of these data sets.
Before that, I don't know, Pawan, you want to talk about, given like the whole data piece is a big initiative that you guys are also driving. And I know we had a recent discussion of aggregating these data sets, creating not a confidence score, but almost a data score based on which NBFCs could also do some quick loans to the nano enterprises, start creating more history.
Yeah. Yeah. So, yeah, thanks, Sita. So the challenge which we see right now on the data piece is that there is a arbitration between what data is needed versus what data is available. The institutions are not very open about here are the things I need, and the providers of the data as an individual often have only limited amount and a set of data. Whereas that is also kind of hidden under wraps, it's not very easily available. So the issue is that if we have to scale, and we understand this, that the institutions will lend to individuals and they need to do ratings of individuals. But we are exploring a concept where we could say that for the same type of consumers, can there be a rating at the level of say a cohort? And this is not JLG, right? It is not a JLG, but for the same type of of enterprises, right? And you could do estimation of income flows and some level of estimation of expenses to arrive at the cash flows of this thing. And then on the basis of that, can you make a loan to them? Very early stage idea right now, but we'd love to understand from you guys that if that might work, because what we need to do is see that how this can get accelerated, right? So availability of individual kind of data, and us going to every household to to ask for that data and seek the data is almost impossible to do, right? On the other side, what we are also trying to do is work on an experiment in Danapur on the SHG stuff, because SHG's got some about 8-10 years of data lying in hard copies, books, right, which is the bookkeepers. Now, is there a possibility of digitizing that? And what does digitization of that take? How will it get recorded? How does it get flowed? So, SHG is today although legal entity, but it's not an entity which is regulated. So hence, can they even input this into a bureau? Or can they even input this into an account aggregator? What will it take, even if the data is available, how do you utilize that data? What could it be? What could you do with it? How do you remove the barriers? So we'd love to understand, because if an example, if this works and we find that that the data is rich and it can lead to decisioning, then then the question is going to be, how do you remove the barriers, right? What will it take for the consent of the individual to come in through to say share my data, or I'm allowing the CLF in that location to share that data. How will it be? Is that revocable? Is it not revocable? All those things will come into play because it's data, and it's a new area, right? So everyone is trying to work around the ecosystem to see how best it can get addressed, and we are happy to talk to anybody in this room and outside if needed, to see if they'd like to work with us on both the ideas, to set, if there is a possibility even remotely to say, yes, this is possible, it's a great idea, let's go experiment it, and the experiment might just kind of fail. On the first idea, we know that taking that information and building a model is the phase one. Phase two is on the model, how can we lend? I think that how can we lend stage is year 2, year 3. But I think the first stage is going to be how do you go out and create the data sets and the model and see what is the level of the efficacy of the data to be able to address that. So I'm just going to stop there.
I would actually love to also get some NBFC or lender views on this. And again, in the interest of making it action oriented, my view will be we'll stop this topic in 5 minutes, but people who are interested, we can actually create a small working group and take this discussion forward, because I think we've been in a discussion mode last 3 months. So the urgency to also say how do we action it, we can take it. Yeah. Any lender or NBFC type perspectives? Yes.
So, I run a fintech startup, but it's more urban and not rural. But so far as Udyam and data sets go, I think there exists certain data sets that we can definitely tap into. For example, pharmacies today get a license, but that license is standalone issued. If it's linked to an Udyam, you definitely know that the two are connected. It can be corroborated. Bombay, the BMC issues a shops and establishment license, which again is not linked. Individual data sets which exist today, electricity bills, just the fact that if as a lender, I'm able to know what is the electricity consumption of a shop for the last 12 months. Today that data comes to us, but it comes via an electricity bill, which is, we try and OCR it, read it, etc. But if it is again linked to an an Udyam, similarly, even in the rural areas, what is the kind of footprint that a person has when he's either using a prepaid recharge? Just the fact that how often has he done a recharge? How long has he had that mobile number itself? That tells you whether he's somebody from a lender's perspective. I would value a borrower who's had a mobile number for, let's say, the last 36 months, as opposed to somebody who's just gotten this number and is coming to us to borrow for the last 3 months. I mean, these are just some initial thoughts, but I'm sure there are other data sets that one can tap into.
So just hearing all great ideas and the fact that we have so many disparate uh, types of data sources. But if we just think about who we are trying to address here, um, I would tend to say that a nano entrepreneur should not be viewed as an individual but at a household level. And because within a household, many different enterprises exist, and one is always sort of making up for the other shortfall, and there's a lot of variability. So when we're thinking about data structures, my guess would be that that would be a better format to go by, as in household as the nucleus and not the individual within that, or individual type of business within that. So I don't know if it complicates the way Udyam is designed, but the companies that my fund is actively looking to invest in, and it's all a lot of new stuff that is coming up. It's so encouraging to see. I mean, what Swakarma is doing and what several other people are doing. That's the difference they've brought in the credit delivery models today, compared to what we have seen for 15 years of microfinance and the growth from there. The thinking is that of understand the customer at a broader level and be cognizant and accommodative of the variability that they go through.
No, I agree on the point, and actually all our customers also, I mean, we have to, really validate household incomes. And I guess at some stage, the business becomes more the identity, and, you don't know, like, what stage they are at and how you de-link business from household, and then the business becomes, on its own. I don't know, Utkarsh, because you guys have done DBTs based on household level, so.
So I think this household thing is something which is a hot topic right now within the governments also. Uh, I've been working with 4, 5 governments on the same topic. I can tell you, Haryana, Madhya Pradesh, Uttar Pradesh, Odisha, Rajasthan, Karnataka, Telangana, Hyderabad, all of them have established their family databases based on this philosophy itself. Even the DBTs they want to do basis this because they would want to see the entire family as such. How much are we supporting a full family? Because especially in tier 2, tier 3 cities, families is what everything matters on, right? So that's what I think. I think another linkage that can be set up for Udyam is these family data sets that are being created in the governments also. We'll be able to identify. In fact, we can also see how much if they are getting support from the government for certain things. That can be also. I'm just throwing it as an idea. If that can also help you take a decision on credit worthiness.
Yeah, so we are a micro lender and we give loans to the nano enterprises. So the biggest challenge we face today is while onboarding the customer, we ensure that he has a Udyam Aadhaar, but the data quality is really we can't use it. The first thing is who is inputting the data. If you depend on the nano entrepreneur, he's creating his own data and creating his own Udyam Aadhaar. Probably he will not be able to do it the way the data structure is made. The second thing, if the employees of NBFCs are doing, so today we do nearly 70-75% of the Udyam Aadhaar done by our employees only. But there also I mean, there are a lot of training and related issues are there where people fail to do that at the field level. So capturing the data, as you rightly said, the first thing is how we capture the data, and there are a lot of deficiencies are there in capturing the data, and a structured process has to be in place, and structured mechanism has to be in place. Who is creating those data for this Udyam Aadhaar? That will definitely help.
I'm conscious of time. I know this discussion can go on, but maybe we could move to the next topic. But I mean, I do feel this is an important area to address. And, if people are interested, again, we can create a small working group. I think there are enough databases, there's enough data. It's more about the linkages and, whether at a household level or at an enterprise level, the more views we have on a customer, I think the more visibility and therefore lendability. Sorry, we could move to the new to credit nano enterprises. Swati and Kalpana are here from Women's World Banking. You want to introduce the topic and take it from
Yeah, I think everybody understands the significance of the lack of access to the NTC, the new to credit customer base, and I think there was, there's enough and more to show that, a very small percentage, which is according to the TransUnion Civil, there's the NTC origination is close to 60%. I mean, of all the originations, 60% is NTC origination. But if you actually were to see the gap in the credit, I think the problem is well established. Opportunities accepted by everybody in this room. In terms of really
Kalpana, on that, I must say we look at a lot of NBFC data who are working with nano enterprises, who have a social impact orientation. We don't see NTC numbers in 2 digits. So I don't know. I mean,
I think
Ashish,
the number, that's
you may
right. And
want
the
to
number
comment
that
what you
we
see.
were talking about was anywhere between, 12 to 19%. I mean, that's all. Even the work that we've done with some of the NBFCs, the NTC segment was a really small percentage. So the question that obviously arises is why is there this inherent aversion? Is it risk-based? What is it based on? I mean, I think that's a question. Why are we hesitant to lend to the NTCs despite the plethora? And I think we've had enough and more conversation about the data that is out there and the means to tap this data as well. But where is this hesitation coming from to actually, I mean, I did hear you say about the quality of the data, but notwithstanding that, there are multiple sources. So why are we hesitant to address this NTC segment? And here I have to wear my Women's World Banking hat and talk about the women in that segment even more disadvantaged compared to the male. That is something that is, again, well established. Women have far more barriers in accessing the credit compared to the male. I mean, and we know enough and more in terms of lack of identity, lack of access to account, et cetera, land not being in their, collateral not being in their name. We know the issues when it comes to barriers that the women face. So is it really due to the, I mean, of course, distribution and the cost forms a very critical piece. We do understand that, but I mean, the way we have, based on the work that we've done, and we are currently doing some work with SIDBI as well, and we are trying to explore, partnerships, really, that could actually move the dial. And Mr. Raman mentioned SHG groups. We are doing actually one such work with them in 2 states of Maharashtra and Bihar, where we feel that, could we look at CLF and, Pawan, you made a reference to it as well earlier, which is that, could we look at CLF, and that whole legal status of a CLF is something that we are taking a call on and saying that, and SIDBI is on board with it, and SIDBI feels that it is a risk worth taking. I think these are very interesting developments out there in the market, and could we look at more such partnerships to better penetrate the SHG? Because I mean, I remember, Geeta, the conversation that we were having just last week, which is the whole new to credit versus new to productive credit. I mean, we understand, and we do know that when it comes to new to productive credit, the customers that are in that segment are not new to credit customer base. They have a phenomenal history, 10 years, 15 years, but but the way in which we look at it, why is that not translating into action? And the last point that I would like to raise here is that could we therefore look at things like credit guarantee for NTC specifically? I mean, there's a ton of work that CGT, MSC, and other such bodies are doing from ensuring, how credit flows, from the various member lending institutions to the deserving segment. But is there a need to look at NTC a little differently? And do we need to have specific vehicles, maybe, to ensure that the NTC segment actually receives this credit? I mean, these are some of the questions and thoughts based on the work that we've done, but would love to hear from
Yeah, I was
everyone
just
else.
thinking again, getting the NBFC perspective, and Ashish, I'm looking at you and Puneet.
Sure.
Yes.
Thanks. I think just want to stick to the first point. It's important that linkages to data get established. To my mind, from what we've seen, given we move anywhere between 8 to 12% of India's NBFC credit, that biometrics will help getting Udyam a lot more validation process, because we've seen the struggle people have a number of more times they change their mobile numbers. The second, how do we incentivize to the 20,000 bucks you spoke of through getting more and more data linked to his Udyam? As a consequence, he gets access to money far more easily, and there could be backworking of pricing and other options of incentivization. And then it creates a massive value proposition, like a digital stack is created in the urban consumer finance business. It can be a game changer. I'm happy to work individually. Northern Arc might with Sidby on this. But I think as we were thinking this through, we believe these two are the big game changers. On the NTC point, across...
Maybe I can just elaborate it a little.
To the,
To your partners, when they're lending to, I mean, do they even give credence to Equifax and a CRIP score or an SHG score versus, a CIBIL score, which is based on NBC?
So we build our own scorecards. We run about 30 scorecards. We have about 47 million time series of loan performance data. 4 years ago, when I moved, we redefined the way we were looking at data. Having servers over 1.5 trillion, we believe we are pretty obsessed with data and tech. That's the two big pieces for us. We launch our own scorecards, which about 5-7 of our large originators, including AAA rated entities, are now beginning to use, including then to the investor community. And we're seeing that we've done it for MFI. We're now launching that towards micro loans. We've looked at about 10 to 14 million of the Nano loans, which is passed through our pipe, and there is very high quality of data. The point on NTC, I think it's less than 12 to 14% in any category, including with hyper growth on the BNPL and consumer finance. The real NTC number there on a month-on-month basis is less than about 14 to 13%. We look at this data live every day.
Because the data then doesn't stack up for us, because we still see such a high addressable credit
So
gap.
there is a large credit gap, and I think we must recognize that. And I think the good part to what you and I are stand committed with the respective franchises is to build a credit guarantee product is a big way to flow of that. The second, there is some piece we need to push to structurally solve. And I think the big part is when you look at it, small ticket secured loans, there's no access to SURFACE. The banks have access to SURFACE at 10 lakhs. NBFCs have access to SURFACE at 20 lakhs. If NBFCs are the pivot on which you're doing the early stage credit, whether it's new to credit, which has a higher mix of new to credit vis-a-vis banks, then NBFC should be given 3 or 5 lakhs of limit to SURFACE, correct? If that's the way you can execute and deliver seamlessly the responsible credit. Coupled with CGT, SME, and hoping some point in time the private credit guarantees product get launched out, will be the two big pieces for the credit to flow far more seamlessly. That's the point I wanted to make.
Our data on the NTC is slightly different. I think we are, through the work that we are doing right now, seeing 30 to 40% of the customers who are NTC. We typically find that most entities end up rejecting NTC customers more often than not. Several entities would basically not even bring the customer to a credit decision if they do not have a credit bureau report. So basically the fact is not that NTC customers are low, they're getting filtered out at the level of loan employees itself. So the challenge of NTC really happens when there is a confidence that the organization has to say that if I am sourcing a customer, can I get a loan passed or am I just wasting my time on it? Because everybody has targets to say that at the end of the day, you need to be able to offer a certain number of loans. Kaleidofin worked on a product called Chi-Score. It's a credit scoring model again. And what we have done is use the power of credit scores to say that even if I do not know a customer today, I have somebody else in my database who looks similar to this customer. Or if does not look similar to this customer today, looked similar to this customer 3 years ago. So effectively today the power of technology, the power of data, the power of computing science that we have is so huge that we have actually an ability to build pretty good models to be able to make some of this work. So my sense is that this will require, I think, beyond just building models. I would say that there are a few players in the market today who have started to use the power of credit underwriting using data. But it requires changes at a little bit more of a fundamental level. And not to kind of bring in something more controversial here, but I actually think that we need a little bit more of a regulatory support in this particular regard. Today, there's a lot of confusion around saying that there is a customer who earns 300,000 rupees and they can be serviced by a microfinance companies. Anybody else who's greater than that cannot be serviced by a microfinance company. Vice versa is also not possible. If you're an NBFC, you cannot go below 300,000, you can only stick at a certain place. And in the absence of having documented evidence, some of this is becoming very complicated. Today you have a situation where a customer is closest to a microfinance entity, but just because this customer is earning 3.25 lakhs for it, for instance, you're not able to service them. We're creating a huge channel conflict in this entire area. That's basically one. The second thing that is happening is that the entity which is closest to the customer is typically going to be a microfinance company, a BC entity. And through a lot of the work that regulation is bringing in, it's putting the onus on banks to start to do all of the credit assisting, which means that first loss pieces are becoming very complicated. Any kind of risk sharing is becoming very complicated. And I don't know what is the space available today for even things like credit guarantee funds. Because again, the point is, are we going to now accuse bankers of being lazy bankers the moment we start to get into this? So my overall sense is that we need to kind of break down some of these walls. I know it's very hard talking about it at this point of time. The focus has to be the customer to say that how do we offer different kinds of products to the customer, and let's create the space to be able to do this. But at least on one side, I'm very hopeful, and through our work, we've now done 16,000 crores. And 30 to 40% of this is NTC, that this is a very addressable market. Today, we have the tools to be able to make it work.
Good to hear that the NTC does get figured out. So where is NTC? Just to come up to the fore.
Yeah. Just adding a bit of again, a lender's perspective, right? So I'm here from Swakarma Finance, and about 65% of our customers are nano enterprises, and the rest are micro, right? Again, we do about 15 to 20% new to business credit. And in terms of credit performance, I actually think they're doing fine, right? Given the limited history we have, right? But it goes back to what Puneet says, right? I think at the loan officer level, what are we looking for? We're looking for some sort of credit. If there's no credit score, what other proxy information can we evaluate? Is it an alternative credit score like he offered? Is it GST? But then again, these are the enterprises who don't often file GST. You know, can we find a way of incentivizing them to file GST, either through Udyam, sorry, and you know, that can be the linkage. You know, that then becomes a form data to look at their assessed income on that basis. I'm looking for other proxies. Electricity bill is something we talked about through Udyam. So what we are really looking for is other sources of data, which if Udyam is the form that's going to take to validate some of that. And, and I think addressing the point about, I think credit guarantees is something we spoke about to kind of push lending in this space. So at least the credit guarantees we've interacted with, and we've had a couple of conversations, is I think there's a little bit of a chicken and egg there, in the sense that you usually need history to lend to, for them to do their credit modeling. But then the problem is there is no history with NTC, right? It's not a significant part of our lending. So it's a bit of a chicken and egg. And I think if we can find the patient capital to look at credit guarantee, it could be interest subvention. I mean, there are models we can figure out to then encourage lending. I think once you build the track record with these entities, like I said, I think I've been pushing for NTC lending because I don't think the data argues against it. But then there is such a strong push from the risk to say, listen, we need some sort of backing to go there. So I think just that.
Hi, I'm Shruti. I'm from Equifax Credit Bureau. So I heard a lot of people talking of numerous data points. Mr. Raman, we do have amazing data on MFI. We have around 660 million trade lines, around 10.8 million SHG member group data available with us. So SHG data is there. On the point whether enough data is being used, many a times we see that when a customer goes for microfinance lending, the lender looks at microfinance bureau. There are chances that there would be footprints in the retail or commercial bureau. So we have seen a huge overlap of almost 30% between bureaus. So what we consider as NTC is not truly an NTC. So that's addressing the first and the second point both. So there is an opportunity that is available with us because there is immense data available. On the other point, are there any other ways? Absolutely. I think Prashant spoke of cohorts, and numerous members spoke of cohorts, which could be used. Credit bureau data is surely one of the data points that could be used. Alternate data is also something that you touched upon that could be used. So there are various options available for NTC. We see more and more lenders doing it, partnering with us. And we heard Ashish speak about the fact that they have these model bills, which is also something, an amazing work that is happening to address NTC. So I think both of these are very, very addressable solutions. We have the database, and it looks like the time is just right. The government is interested to ensure the credit bureau, the system is interested, and the lenders are absolutely interested, is what I see. Thank you.
Yep. While we deal with these micro borrowers, I have a contrarian view. In our portfolio, we have 20% plus NTC customers, and we do 5 lakhs rupees secure loan. But we are actually not getting the NTC customers. Even if we try, we are pushing it hard because NTC customers are the best performing in my portfolio, but we are not getting enough, customers are the field who are actually willing to take a loan. Because, the tier 3, tier 4 type of cities, when they when they have not taken loan for a long time, they really don't want to take a loan by offering a collateral. So whatever push you do, you will never get beyond 20-25% of the NTC customers in the segment.
If I can, I'm from Subk. I can share a pre-COVID experience because COVID has disturbed the whole data thing. I think a bit of a demystification of how we look at credit score. And if you look at, I don't know, other NBFCs share this thought. If you look at the performance of the customers with lower credit score, they're actually better performers than those with better credit score. So I don't think we should overstate the reliance on credit score as the underwriting tool, which is one of the data points. So I think coming to NTC, if you use the credit score as one of the data points in your scorecard, then it is not a filter. It is just lower score on 10 points that you may be evaluating. And that's how we approached it when we did our MSME lending. Not having a score is not a disqualification. It is a lower rank on that particular parameter. But they may have a better score on many other things. There are a lot of alternate data that we talked about. So I think it's all about the approach that one takes and maybe helping some of these institutions look at this overstating credit score as a filter is probably not a good thing. Because a good borrower today can be a bad borrower tomorrow, and a bad borrower want to become a good borrower today. And no credit is always somebody wants to actually build a credit score. So I think this behavior aspects are very critical. So I believe there is the experience that we have had is, like you just said, for NTC customers, behavior was actually a lot better in compared to the various cohorts. And we had about 50% hits when we did Mudra facilitation. 50% hits, and we never rejected a customer because of NTC. They may have got rejected because there are other points where they were scored less. So I think it is about how you evaluate a customer and put this criteria as a key criteria or as one of the many criteria. Then it kind of works in some way. Yeah.
Mr. Srinivasan, I wanted if you had any comments on the channel conflicts that Puneet talked about, given you work with MFIs, SHGs, NBFCs, and SFBs and banks. So,
Mm, I think in general, um, what we are trying to do is to fill a gap in what you call credit that seems to be required at certain levels, which is a public policy kind of an objective. We are trying to marry it with business objectives of institutions which have to take a credit risk. So when we do this, how are we going to compensate the extra costs, both relating to OpEx and risks, that will make the business objective realize itself and be congruent? See, in the case of microfinance SHGs, we did things like assume that people are basically going to repay and cure whatever their methods of operation are with, say, some amount of training, capacity building, and institutions stepping in a big measure to ensure that people understand what they are doing and how do they service the credit. But this segment where we are talking about new to credit, yeah, basically SIGs, MFIs are new to credit. But you're looking at having a higher level of risk. I do not know what amount of data will make institutions lend. Somewhere I think the extent of data that you require and the intent to lend, they are very inversely related. So there is some stage at which, like in some of the what you call more involved NBFCs in the field, they have gone and taken a risk. They develop the segment, they curate the people, and then they come up with solutions. Because we are having a technology-based data offering, we think that substitutes for everything else that we don't know. So this is slightly dicey. So we have to look at, okay, how do we weight it in favor of institutions which want to do this, which want to take a credit exposure through a guarantee product, right? Maybe we set up a risk fund. Also, we set up bulk funds, which these institutions can take and then lend further down. Don't introduce interest subsidies and distort the market. Give these bulk funds already at a slightly lower rate so that even the people who are new to credit, new to institutions, can operate at a slightly lower cost structure and then try and repay. Otherwise, yeah, data is a good enabler to filter and identify customers. But like from subcases, she said, look, those who are not having those numbers, they simply do not know what their numbers will be like. Does it mean that they don't have the entrepreneurial skills or they cannot survive in the market? Everyone has a way of progressing forward. So we'll have to take the extent of data that we require and the fineness with which our algorithms can make decisions with a pinch of salt.
so that's an interesting thing, moving the data layer or the fund support from the customer to the institution, because the institution will know how to find its customers. And perfect. With that, maybe I'll move to the last piece. I mean, I do think in this whole NTC, I mean, one takeaway for me is maybe there's a lot of buzz around credit score and creating a credit score, but from a lender perspective, it's just one of the inputs in many things. So, that itself will not lead to an expansion of the market. But yes, that along with several other data. So I think we go back to our first topic of just saying more and more data on a customer, an enterprise, or a household, and that holistic view of a customer is important. Yes. I, yeah, I agree. And maybe with that, I move on to the last piece because it is related. It is about product customization. And I think, as I said, there is limited customization. I think I go back to the channel piece. MFIs operate in a certain way, NBFCs operate in a certain way. And yet, at the customer level, you need flexibility of whether you call it working capital, top-up loans, flexibility of funds. We've been having some discussions on micro equity funds also. But the root is if you can have like a on-tap line subject to certain constraints that may be the best suited for our nano enterprise. And I don't know, Manoj, you want to talk more about that and maybe the role SIDBI and some of the other institutions here can play.
Thank you very much, Geeta. So on to the third point, which is customizing credit products. And I mean, if you look at for the last 25 years, we have been going down the group lending path, and 40 billion in outstanding in JLG, another 20 billion probably in SHG credit. So a great journey, but a journey that doesn't really allow us to innovate. That's pretty much what you will get. It's the Henry Ford. You can have any color of the car as long as it is black. So we've been going down there. It's good to see things changing in the last 3-4 years, primarily led by technology, of course, data and technology, and that journey is just about started. So we don't have models that are, we can say that this is how it's going to be from here on, but it's good to see a lot of innovation happening. So once one looks at it from the credit point of view, I mean from the customer point of view, the customer really wants products. I mean, if you look at whether it is the SHG customers, the top 15%, which is the entrepreneurial customer, is not really happy with the sustainable credit that you're giving. This is sustainability credit largely. This is livelihood credit or a credit that allows for diversification of risk. It is not an entrepreneurial credit, the group lending credit. So whether it is SHG or JLG, the top 15% of the client is looking for some serious entrepreneurial credit, which is tailored to their needs. And Mona brought in this excellent point that probably it will be good to look just beyond that individual to the household. So another added level of complexity. The third thing is, of course, is that the client is looking for working capital loan. We all talk about largely term loans, and the client wants is some amount of working capital loan. Now there is Diwali, I need to sell more. Where do I get credit from? I don't want to carry it for the rest of the 18 months or 24 months that you're likely to dump it on me for. So I think that is where we all stand today. And India is a very diverse development model in the sense that public sectors have traditionally played an important role in terms of putting in the risk capital, putting in the thinking and putting in some sort of grant support as well at times to say that this is probably the pathway that we should adopt. Whether it is a microfinance sector or for that matter, this whole JAM Trinity and the India stack, you look at government behind all this. So it's good to see that SIDBI is now sort of looking at this and looking at it very aggressively actually to say that how do we get what is JLG microfinance, what has been JLG microfinance for the last 20-25 years to also look at individual loans. So how can we graduate some of the top end customers of microfinance institutions and get them to take individual loans. There is discussion going on to say that how do we get them to take working capital limits and give them working capital limits aligned to whatever credit has already been sanctioned to them. And then of course, newer channels. So channels like, let us say, payment banks or using UPI data. Can we structure a product that uses payment data largely and use it as a proxy to develop some sort of credit products? So I think this whole sort of working capital needs, the ability to get other institutions to come on board and create some co-lending models. I think this is where probably the future lies. SIDBI has shown a lot of appetite, capacity, and actually foresight in terms of trying to create some of these models. And rather than sort of go about it, I would like to invite Prakash and say, can you give us some ideas around what you're thinking on these lines, and then maybe we draw some of the other institutions to say, why don't you come on board and let us try and experiment.
Yeah, thank you. So yeah, you rightly articulated that we need to look at graduating customers, and we have started our Prayas program a few years back. Then the COVID came, and we are also struggling with getting the right models in place, the technology platforms in place, but we could finally get it right. And last couple of years, it has taken a huge leap, and we have been able to build a book of around 1,800 crores through partnership lending model. And the loans are typically between 1 to 5 lakh, and most of them are graduates from JLG. And the portfolio is behaving very well. We have 7-8 partners. We are looking for more. We have big plans for taking Prayas to maybe, I don't know, 10,000 crores in the next couple of years. So this is one. Obviously here, a lot of scope does exist of getting a better credit assessment done. So right now, to start with, We have actually trusted our partners on the field. I mean, assuming that they know how to originate the credit, even at that level, because of their presence in that area, and they know how to do collections. Lending is more about collections also. And whatever tools you develop, if you're not able to collect, then defaults will happen. Okay, so this is one. The second thing that, so we are trying to build some intelligence there. We are looking for non-originator partners also here. So the example which was given is it was looking for moving to SHGs graduates now. So that's another challenge. So whether the cluster level federations which are created out of the SHG structure, whether we can partner them with them as a Prayas model. So currently also some of these federations are helping origination of individual loans, but that is a different model. They just refer the loans like a referral kind of a thing. The bank's people will come and make their assessment and give some loans. Some loans are happening, but nothing big is happening. So if we can build the capacities of these federations to actually be our Prayas partner, just like a microfinance institution is. It's again a challenging thing, it's not easy, but we are going to do a pilot, launching a pilot very soon. So if this can happen, then without we being physically present in that area, we can actually do some good loan originations. There'll be some, obviously, skin in the game, some FLDG we are negotiating. So being a government system, a lot of resistance is there. But we're trying to convince them that this is required if they want to scale up the whole thing. So let's see how it pans out. SHG, big challenge is that obviously we all know what's the challenge. And one thought which I've been discussing with the Credit Bureau is that can we start scoring the SHGs? I'm not sure whether the score for SHGs exists just like personal credit score exists. It does not exist perhaps. But that is a need of the hour in my opinion. Because now we are seeing that SHGs are getting loans as high as 10 lakhs also. There's a credit guarantee scheme also for SHG lending by our National Credit Guarantee Corporation. And we have seen cases of takeover of SHG loans also. So we have reached that stage of SHG lending where if a bank is not able to give required demand to the SHGs, then the loan is being taken over by some other bank. So that's a good thing which is building in. Obviously, the underlying borrowing data is not coming in. So if we have a score to begin with, just simple suggestion, at least you know that this lady is a part of that SHG which has a good score. So from that score, perhaps something can be built that you are a part of the good SHG which has a good score, and you can take a referral from the SHG, and that can get into feeding those loans. So this is one. CLF, of course, is second one. Through CLF structure, we do it. And the third and the most important thing is, as Manoj mentioned, that there's no innovation in the microfinance space for last 30 years as we have been seeing it. It's just a 52 weeks loan or a 100-week loan or whatever it is. Whatever name you call it water sanitation, you call it education, or whatever name you call it, business or whatever. It's just a loan, term loan, which is to be repaid in weekly installments. Now here the innovation, again, this is another challenge, and SIDBI loves to take up these challenges. So now we have a credit on UPI. So obviously this is very limited, given to some scheduled banks and not even to SFBs at this point of time. So obviously RBI also has certain views, so we are in discussion with RBI whether this credit on UPI kind of a feature, either that credit on UPI or something similar to credit on UPI, where through an app, so if we give a 1 lakh rupee loan to a micro enterprise, the second part is seasonality, etc. will come later, but at least are we able to give him a revolving credit facility? So can 30% of that loan of 1 lakh can be offered to him through an app using the UPI feature where he can do the transaction and they can make the collections and the interest burden can be reduced. And in fact, I went to personally visit a CLF in Thane and we discussed this product with the women. They were so excited. Sir, ye kab launch kar rahe hain? And I said कि अभी उसमें time लगेगा, but they're so excited कि इतनी flexibility हमारे पास होगी कि whenever we need money, we can draw and we can repay. So this is one thing that we are also trying to experiment with. So yeah, and this is primarily what SIDBI is doing, and we are looking for all kinds of ideas, all kinds of partnership, which can help scale up all these activities. We are committed to this micro enterprise segment, informal sector micro enterprise segment, and whatever is required to be done.
Sorry, Prakash, on the credit on UPI, is that only experimentation only for SHG customers?
No. Credit on UPI is for all. Initially the idea was that all the informal sector enterprises which are getting registered on Udyam Assist platform, they should be given a Vyapar credit card, automatically a 10,000 rupees Vyapar credit card. The 10,000 rupees loan is not a risk. But at least the benefit of it will be that they'll have a revolving facility. The usage of UPI will increase. The attendant benefit is that once you have that facility, you will automatically learn, leave aside all the financial literacy training. If you know that your phone can give you a 10,000, they'll buy a smartphone, they'll tell their son to teach them how to operate it. So it was a very powerful idea, but we are just stuck in getting the all approvals and the processes, etc. Right? Then the credit on UPI came subsequent to that. But still we understand that RBI still is not very, that's our understanding, needs further discussion. They still want not to be rolled out as a revolving facility, but a loan facility on a UPI kind of a thing, I don't know. So that will require some discussion, but there are other alternatives available. So we know of some NBFCs who have developed the product. The whole thing will operate in a closed system, not in an open system that you cannot get your account linked to say Google Pay, but on an app, your limit can be available. You can use that app. The app will maintain your limit. And when you make a transaction of UPI transaction, instead of your account getting debited, the SIDB account will get debited, or a bank account will get debited. Similarly, when you collect a payment, instead of your account getting credited, SIDB account will get credited. So these solutions have been developed, and let's see how we are able to navigate the whole regulatory thing and roll it out.
Given all the digitization of your customers and their digital sort of familiarity, I'm calling it a top-up loan or a top-up line. But, is there both a need and an ability to take it up?
Yeah, see, there are two quick points on that. One is when we look at our data, there are about 70-75% of our customers, the microfinance customers today are paying digitally their repayments today to us. That also through an app that we have given them. So basically they're making an effort to learn it, and I think most of them use other apps also. It's not that we are only the one giving them app. But within the data, it is very clear that about 40% of the total customer base, which is more than half of the ones who are paying digitally, are either paying before time or on time. They're paying fully digital, in full groups, and full amounts. So, which essentially means that the traditional way of thinking that, oh, you know what, you need to send a person, you need to have these people sit in front of you, you need to count this cash, give a physical. I think customer is actually communicating. More than half of the customers are already communicating that, you know what, give me an easy way to pay. I don't need anything else. I don't even need you in front of me to pay. So there is this discipline aspect that is already, thanks to microfinance world, right? We have actually inculcated this sense of discipline that you need to pay back your loan on time. But does this customer actually get how much they want? This artificial cap of 3 lakhs is actually suppressing the whole credit demand in a way that this customer will never be able to graduate beyond. Because then there is a whole white space. Beyond 50,000 up to 5 lakhs is a big white space. Some innovators are in the room who are trying to do this, but it's not prevalent. Nobody gives the loan. So I think this whole regulatory discussion also is relevant in this context that in Tamil Nadu, a 3 lakh income is different than Bihar 3 lakh income. But today, everywhere it is 3 lakhs. That means in Tamil Nadu, if you run a credit bureau, FOIR is family obligation to family income to obligation ratio, 90% customers are actually running out of limit. Not because they're bad credits. They're actually good credit. Everybody in the family have some or the other loan, but they can't qualify for a microfinance loan and there's nobody else who's giving them a loan. So where do they go? Yeah, but 25% is something that people want to keep it because there's a cash reserve also is counted in that 25%. It's not easy to count that in advances form, and there's a problem in that. I think the point I'm trying to make is that there are a good set of customers who are graduating out of JLG, not only from a financial perspective, from a digital readiness perspective, but then there is supply constraint. In terms of how do you define that product, how do we create this working capital limits, provide them the extra top-up, but even the top-up has to be fit into this whole FOIR formula. It can't be beyond that. So one has to get into that level of conversation also. How do you relieve these people out of this bucket? Or do we say, okay, a graduated customer, can we take a 4 lakh limit? Third cycle, can we make a 5 lakh limit? Is there a graduation income levels also that we can account for so that these people who are demonstrating good credits are not getting enough credit? So I think there is something that we need to do about it in terms of recommending a relaxed or a graduating model of regulation so that these customers will slowly get beyond what they are within. Yeah. Loan size. All loan size will automatically increase because now the loan size is now as a formula of the income. You know, everybody wants to fill the cup. Yeah, exactly. And a lot of them are paying before time. You know, they are paying when they have money. You know, that flexibility comes in digital world. In a physical world, you can't give that flexibility. So I think the customer is evolving. And as a lender, I agree with Prakash ji, sir, innovation is very limited in microfinance world. So we are all locked up in one product, one boundary. I think that has to be reviewed. Yeah.
The other issue which is very connected is we have got MFIs that are operational on the ground. Somehow the qualifying assets threshold, it prevents them from doing other new things. The encouragement is you keep on giving this 12 installment, 24 installment, at time 36 installment loans continuously. Suppose they say 50% of your loan assets can be given for the 50,000, say 1 lakh to 5 lakh category, then there will be incentive to invest in product development. And we should also back it up by, say, bulk finance resources, which accompany that. Then we see that nano enterprises really get supported. Then we don't need to invest in a new institutional form for about 2-3 years. But we look at the market, the kind of demand that is there, I don't think, even if we increase the capacity, lending capacity by 10 times of people at the bottom of the pyramid, still we will not meet that demand. That's the kind of demand. So when people ask about competition sometimes, I'm amazed. Where is this competition coming from? We are just trying to look at what we think as the best credit quality, best repayment capacity kind of customer. Competition is there. The rest of it we don't know. The fear of the unknown, that is the largest demand that's there in the market. So the short point is,
Some of us who've been through the MFI crisis, I feel on the nano side we should be careful because certain pockets are definitely getting over penetrated. And yeah, yep. I know. Abhijit.
Yeah, I think maybe I open another debate on this, but I'll try to be as with few points only here. See, there are a lot of learnings in the space, and first and foremost, when we started with the microfinance example, everybody talking of microfinance, there were worldwide demonstrations, including Bangladesh, that it worked, and we copied a lot of things, right? Now there are a lot of things happening in Latin America on individual lending. So in India also, I mean, Geeta, Manojji, both of you would have seen how the small marketplace operations also happened, right? A chote market mein, you do only daily collection and daily lending, right? It worked well in many micro markets. If you look at some of the PACs, primary agriculture cooperative societies, the models there also work. Not all. There are failures, a lot of failures there. But there are a lot of things which has worked in this market, And I'm against guarantee precisely because at the end of the day, guarantee is back-ended. The lending institution which operates on the ground actually first has to take the hit. And when they go to a lender to get the money, ultimately they will look at your cohorts and saying, hey, 30%, oh, you had a guarantee, but ultimately you're not choosing the right candidates, right? So one has to be very, very careful how you use the guarantee tool. The other point I wanted to also highlight is, this is an example from our own experience also in our NBFC. See, we do, what you do is NTC, we do NTC companies mostly, right? And one of the questions I face from all my lenders, the first and foremost question is, 77% of your clients are unrated clients. I mean, you are taking very huge risk. We don't want to support you because you are doing risky lending. Now, the question is, risk is a perception, right? And until unless you have enough way to cover, a credit score cannot be a risk mitigation tool. You have to understand the cash flow of the business. Even when we graduate from our 50,000 to a 1 lakh, 3 lakh, 5 lakh, whatever, you need to graduate to the mindset of assessing the business because at the end of the day, whosoever money it is, when you are on the ground lending it, you need to understand the cash flow and you have to have a system wherein you can really on a regular basis see what's coming in and what's going out. I think at some point we have to do an innovation with a tie-up with a bank to say, can they do a daily collection to their account, like a working capital type of arrangement? See, this is the need. I mean, everybody's talking about that. What innovation can we do? I saw one NBFC trying to do that work. Like the bank is at the back end and they can daily collect and do it. I don't know regulatory it is permissible or not. Second part of it is if you look at RBF, which is revenue-based financing. Legally, I mean, NBFCs cannot do it if you look at it. But people are still doing and trying it out. Correct? So I think what I'm leading to is there are a lot of innovations and work that has gone into this space in India itself. Can we, and most of us don't know that. Is there a way to also get that repository and circulate to people so that they can start thinking on those lines that this model has worked, you know? And like this, one of the very interesting example also is of, three-wheeler loans. Like auto loans, you saw 36% default at some point. Somebody figured it out that it is a problem of the product design. So because the auto drivers earn every day and have to pay at the end of the month, they cannot keep the money with themselves. So somebody just did a small job of collecting the money, putting it somewhere, and then getting it to the bank. So I think we need to think of those things which will make it easier instead of just the credit score. Credit score is only one component of it. We have to look at it holistically, including the regulation part somebody highlighted. Thank you.
I think that's a good way to end. I know I'm conscious of time, so we will let you leave at 3:30. But this was a good discussion. Abhijit, the two things that you do not like, I mean, I must say that we've invested behind both credit scoring and credit guarantees. We think they are important at a certain stage in the market. But I mean, I would say the two big areas where I mean, there is more work to be done and would invite participation from the group is actually just the data linkages around Udyam and making that like a stronger platform, stronger identifier, stronger data set. And the other is on the product customizations. We don't have the regulator in the room. I'm glad you didn't take names of NBFCs which were not following the norms. But at the same time, I do feel, both within the regulation, there's some scope to do more innovation and customization. And then, of course, there may be some policy aspect to push it further. I think having SIDBI in the room, some of the ideas that both Mr. Raman and Prakash gave, those are definitely worth following up on. And I think there's an open invitation from Ashish to use the what enormous database that they've built up and the credit scoring on that. But I do think, I mean, these two areas we'll come back to, but if there are more suggestions, interest to come back to us, please write to us and we'll form small working groups.
Yeah, just a quick point. All of us in this room are actually giving Mudra loans. So Mudra is just a agglomeration of every loan given that is below 10 lakhs. Now, there is a guarantee CGFMU under NCGTC and there is a CGTMSE. Now, it so happens that CGTMSE is today easier and less expensive. But I think there's a lot of strength in the group here having a conversation with NCGTC because it's a little more flexible to be able to create something for Mudra loans which are completely unsecured, and you need to talk about the interest rate cap. Is that you have a 75% or a 72% and an 85%. So now CGTMSE has gone up to 85%. So you have an 85% reduction in your capital charge. Now that is the single biggest reason why a guarantee scheme works. And therefore, I honestly believe that we should pursue more deeply a much larger guarantee scheme. I would go to the extent of saying that for anything less than 10 lakhs, revamp the NCGTC scheme. Because remember, government has now a fairly large amount of, I mean, it's not, money is not available, but ECLGS hit was very small on government. So what was expected was a very large hit. I think today the claims are at levels of, not even 5% of the corpus, which is 3.5 lakh crores. So, we have sufficient sort of, mind space within government to talk about revamping this particular guarantee scheme. Everybody in government, be it DFS or MORD or MSME, is very keen that information collateral based lending goes forward. And therefore, we are out of anything called Sarfazi. In fact, we shouldn't even talk Sarfazi. For 10 lakhs, it's not worth the money. So, I would strongly suggest that we create a very clear product that we will, sort of go up to 10 lakhs, and even the differentiation between an NBFC and an MFI is soon going to go. So, you're talking about, lending, and it is going to be at an individual level. You may certainly have 10 more points to help you take a call that this family is stronger than that family. But that's, about the additional data points that you're going to get. And the, other point is really that on SHG, now whatever data we get, and I think we should actively get that data and push it into a credit bureau, because it will certainly help enhance the richness of data that each individual has got. And the last point is, I think, the most difficult. Now, payment aggregators are sitting on the best data. Now, they actually will be able to help you because, the digital payments are going through, and he's completely right, I think. And you were saying that more and more borrowers are just paying digitally. Now, how do we move to a situation where we can capture some part of that payment aggregator? So it's the Googles of the world who are going to take over all that we do, and they'll do it in a flash. I mean, tomorrow they might give loans at 14% up to 10 lakhs without any guarantee because they've got enough data on people's behavior. So what I would strongly suggest is we work with people who are into behavioral monitoring. Now, we have seen somebody coming forward with an amazing data set of gig workers. Now, what is their behavior and what is therefore a variance from their normal behavior is a credit score. So every industry set or sub-segment, I mean, you can, take your pick. Gig workers is just one very large group. But I would say carpenters, name it, every single trade has a particular behavioral set within it. That's the data that we need to start looking forward to. Now, within the fintech community, I think we've got enough people who are willing to work on those data sets. So I think that's really when we are talking about data becoming the basis of lenders actually lending money. Thanks.
Excellent. Thank you very much, and thank you to Microsafe, Manoj and team. So the reports are on the table. I think this discussion was a little